Hello, this is Jim Smith from GannAnalysis.net. I'm looking today at the square 144 as it applies to the S&P. If you start from this low here in March of 2009, that's exactly 12 years ago, or 144 months into high, and you've got what looks like very soon to be a key outside reversal month down, or if you like, candlesticks, a bearish engulfing pattern once you take out this swing low from this prior swing low from February around 37.25. I think you're going to take it out, and as you print this, as you go down, you're going to start looking at this line here. Why? Because this is the one by one. And if you're constructing this square 144, the box size 144, the price unit is 16. What that means is we're moving up 16 points per month on the one by one. And the one by two, this line here is half that. So instead of moving up 16, you move up 8 points per month. This would be twice, so you move up 32 points per month. So that's how it works. And we also divide the square based on time: 1/4, 1/2, 3/4, completion of the square. So 144 months, it's the square of 144, which coincidentally means that you complete the square 144 months later. Now, you might wonder, well, if this is the completion of the square in price, how come it didn't stop here? Well, you know, if a market is really strong, it's going to blow through it, and it did. But notice here, it stopped the rally here on this 2 by 1 line, came down, found support here, then rallied back, got almost to the halfway point of the next square up in price, and it is selling off now. So what I like to tell clients is time is more important than price. So even though you didn't get all the way up here, it's okay. Time is more important than price. So if the cycle is due, the market has to turn down. Now, you wouldn't base your trading just on one cycle. There's many cycles to look at. Today I'm just showing you the square of 144 and the 144-month cycle. I'm saying that there's more to this than what you see here. Gann is pretty complicated. There's a lot of cycles we look at. And generally speaking, we look for clusters of cycles to indicate when a market change is likely to happen. And the more overbought you get going into the cycle, the more likely you are to get a turn. Or vice versa, if you sell off into a cycle, if it's more, the more oversold you are, the more likely you are to get a rally thereafter as the cycles come due. So this is very nice. You know, you did get a pretty strong move up from March. Also, you might notice that March of last year was the low, so you're just about 12 months low to high. You're 144 months low to high, and there are a lot of other cycles I could point out. But if you become a client, you'll see all the cycles, and you'll see why it's so compelling that this market is topping here in March. How far is it going to sell off? That's a good question. We have support all the way down, but again, there are other cycles telling us when it's likely to bottom. And if you become a client, you'll see when it's likely to bottom, and you'll know which price level is likely to give you the low based on the timing. Remember, time is more important than price. You need to know when a market is going to top. You need to know when it's likely to bottom. And then if it bounces off support, one of your Gann lines, in sync with the cycle, then you have time and price. You know that a change is likely. That's all we're saying. Time and price work with each other. They dance together. You can't use one without the other. Now, you probably heard, you know, never try to time the market. If you believe that, you're a fool. Because the reality is, some people like to tell you that because it builds them up. It builds them up because then they can say, I'm just this really special person who can understand the markets and I do it without timing. Well, I think it's pretty silly. I think what you really need to do is figure out what the cycles are, see how they apply to your market, in this case the S&P, and then if it's all lining up, it's never going to be perfect. You're not going to be right every time. But if a lot of cycles are pointing to a turn and the market is hugely overbought going into the cycles, you have to know there's a high risk of a top. So I told my clients about this before the event, and you're going to hear from all kinds of really smart people telling you after the event. Where were they before the event? Nowhere. So, in fact, just a few weeks ago, there were people saying, oh yeah, stocks can keep going higher, yada, yada, yada. That's what they do. They tell you that, and then as soon as the market starts to crash, they turn around and tell you, oh yeah, I told you that markets were going to go down. No, you didn't. You didn't tell squat. I'm saying it's not the opinion of Jim Smith. It is the 144-month cycle. It is the 1-year anniversary of low. It is a whole range of cycles that call for a turn. So let's say that you buy into the idea that, hey, this is definitely a correction. You're going to want to know how far it's going down. You're going to want to know when it's going to bottom. And that's why I think now is the most compelling time for you to subscribe to the service. Go to the website, www.gannanalysis.net. You can do a trial subscription for 3 months. Check it out. There's no obligation. I don't keep your credit card. If you say, hey, I don't want it after 3 months, you're done. I don't ring up your credit card again. It's just basically you have to tell me that you want to resubscribe in order to renew. Some people worry about that. I don't blame them because a lot of these websites will, as soon as they get your credit card, they're going to go crazy and you'll never get off their system. We don't do that. I want to provide you a great service so that you will be compelled to renew. But the onus is on you to renew every 3 months. That's how it works. I hope this has been helpful, and watch what happens next week. This is going to be exciting. Good luck with your trading.